Hello and welcome back to Taking Back Saturday, a Happy Buyers Club podcast where we break down the real estate market each and every Friday to help home buyers build confidence, follow a process and hopefully buy really happy. I'm your host, Chase Jones, and joining me as he does each and every week and sometimes during cyclone conditions for a week at a time is my mate Sam Hunter. How are you, friend?
I'm glad that we're not living together again.
This podcast could have been done from home.
What everyone who's listening to this won't realise is that we just set the mics up again because we took them down because we were like, you know what? If the roof rips off the office, at least we've got microphones to keep the podcast rolling. And so we had them sitting in the back of my car. Thankfully, we didn't need to use them. And we're back to relatively normal
for sure.
As usual.
I tell you what, you take me back 5 days when we were all bunkered down at Jones HQ. Yes, we had the microphones, but if you tried to do a podcast with 4 mental children, 2 fairly over it wives, and us living our, reliving our youth. Yeah. It's like, we're back, baby. The old team living back together.
For sure. Thank God footy was back on the weekend or we might have actually all lost our sanity.
Yes.
Let's go Broncos.
Go the Bronx. Love it. Mate, we put out the call out on Instagram yesterday. We're recording this on a Wednesday morning, just a timestamp for everyone. Love these episodes because it gives us a really good sense of what people are wondering. Like, we think we've covered everything in these podcasts when realistically there's probably some things that are a little bit niche that people want to know about. And some of this stuff we have gone through before, but I see there's some cyclone questions in here.
For sure. And actually, that was probably the most popular question was what's going to happen to the market after the cyclone?
For sure. Let's kick it off, man. Like, that is the first question there from Andrew. What can we expect to the market, with the market in Brisbane post-cyclone?
Not much of a change, I don't think. We sort of made the throwaway comment that flood-free houses just got more expensive, and I genuinely do believe that will be the case. There's a reason why every week on this show and with every client we represent, we talk about real estate fundamentals. If you were flood-free on the weekend, you just had one thing to worry about, which was wind and trees or whatever it is,
and
right? Sanity and power. Thankfully, most of the properties that you're looking at in Brisbane are going to have power, and most of them are going to be pretty wind resistant, but not all of them are going to come with zero flood risk. The properties that have been inundated, and for anyone listening, if that was one of your houses, like, our hearts go out to you. Like, it's not fun. And it does seem to be happening in Brisbane more regularly. We had a chat with some new clients of ours who've just moved to Brisbane, and we were trying to explain to them that when we were growing up, it was a 25-year drought. And everyone was worried about 4-minute showers and water tanks. We are definitely in a different weather cycle now where we have a dry season and a wet season, summer, winter. And water, you've seen the videos, you've listened to us talk about it on this show a lot. Water plays a big part in Brisbane life and a hell of a big part in Brisbane stress and anxiety when it comes to your home as well. And so if you didn't have any of those constraints against it, you just had to deal with the first part of the cyclone over the weekend. And you're probably dealing with the storms when they roll in Brisbane all the time. If you do have water risk, particularly overland flow, you would have had a pretty shitty couple of days, I reckon, and you would have had a pretty nervy couple of days. We've got some friends of ours who they flooded in 2022. They didn't flood this time, thankfully, but it wasn't fun for 48 hours when they were watching the water come up their street and then just stopped and receded.
100%. And people have short memories. So I dare say in 3 months' time, that this weekend gone is probably going to be a distant memory. But, for anyone that is either whether they're a buyer now or potentially a buyer in those few months' time, put yourself in the shoes of what those 48 hours were like, sort of Thursday, Friday last week, where people who, either are aware of the flood risk at their house or are potentially in a bit of a close to planning zone for potential flooding. Those anxieties, man, that is a feeling that you wouldn't wish on your worst enemy.
For sure.
So put yourself in those shoes when looking to make a really good real estate decision.
They were the people that were lining up for sandbags, complaining that the council was out of sandbags, right? There will be another flood in Brisbane, smaller, bigger, who knows, within the next 10 years, right? That's just the way that it works. There'll be enough rain, there'll be a king tide at the same time, where particularly if you've got overland flow challenges, you're going to have water problems, right? It's just something to think about. It doesn't mean ignore it completely, but it does mean think about what the plan is, how do you mitigate against it and everything like that.
100%. I think to the question about what is the market going to look like post-cyclone now, I think we're going to see a little bit of a quiet period. I know that we've been lucky enough to see a bunch of properties this week, including stuff we had under contract. Shout out to some awesome sellers who sent us videos of their properties just for some peace of mind for our clients. Love that. We've also got properties that are coming to market this week where they're confident in their property, their agent's confident getting it out there. Sun came out briefly yesterday, dried out a bit. But warts and all, here's our house. Yeah, the ground's a bit wet, but we're bringing this to market. I think for a lot of sellers, though, they're probably like, there's a bit of cleanup to do. There's a bit of sanity to be sort of reinstated in our lives. Let's get everything perfect, so to speak, before we present it to market. So I dare say stock is going to be a little bit pushed back just in the probably fortnight to come.
I reckon if you're one of those buyers that we talked about at the start of the year that made the decision that 2025 is the year to buy and you haven't bought yet, it'll feel really frustrating for a couple of weeks because there'll be a perception at least that nothing's around, what's going on? And then it'll be Easter and nothing really happens in the first couple of weeks of Easter, and then it'll be the perfect Brisbane weather for 3 months, and there will be some interesting property come to market. Don't feel like there's nothing out there. Just keep doing the stuff that we talk about each and every week. Be diligent with the agents you like best. Ask them what they've got. Ask them, is there anyone that was going to be selling in the next couple of weeks that's just cleaning branches out of their yard? Because we can look past branches. We are really motivated. We'd love to go and buy something before Easter, just to give you guys a sense of how we're managing these conversations moving forward as well, to see what opportunities that we can go uncover. I'll go back to my point on, I think flood-free property will see a premium, certainly in the short term. I agree with you about people having short-term memories, and by the end of winter, we won't have forgotten about the flood if you're flooded, but a lot of the market will have just moved on and go, maybe it won't happen again. I think there'll be a lot of people who have bought in the last few years, like post-2022 rain bomb event, that may have seen water now and they'll want out, and they will potentially be selling at a loss. And what that will do to market statistics is either put us in a negative growth phase. I don't think that'll be the case, but it'll make the market seem flatter than potentially it is, because there will be people that just want out and they'll take what they can get. And there is always a buyer, right, at a price, regardless of what constraints or issues
spooked the seller was,
or compromise that those properties come with. So just if you see market data come out every month and it's like Brisbane, stayed flat or did this, just be conscious that there's good property selling and there's probably some fire sales that are out there as well, because people just want to move on from the trauma and get out of there. So it's good to be informed. Listen to this show, find some other places to get informed from as well, and then ideally you'll have confidence in the decisions that you guys are making.
Next question from Susie. Will interest rates come down again? And this is off the back of, I don't think we did a market wrap sort
that
of.
Was going to be this week, and
really?
Here we are.
Yes. That would have been the one we did from the bunker. But we've had what is, if you read the headlines, there was, a little bit of a dip nationally, although Brisbane was steady throughout that time. But then as of last month, with that little interest rate helping hand, bang, growth back in the Brisbane market across all segments. Do we see another one coming down in the near future?
I doubt
Probably
it.
not.
Yeah. I mean, next meeting's in May. There's going to be an election in May. Then there's potentially a new government or the same government. I would say that you'll see, certainly in Holo, our mortgage business, we expect there to be at least one more rate cut this year, but not until the second half of this year, maybe two. If there's another one, I think that's when Brisbane itself starts really kind of kicking off again. And if you look at all the forecasts and predictions, and we talk through some of what banks and economists were thinking of the market and what percentage growth we might see throughout 2025 towards the end of last year, they were calling sort of 6 to 14% growth. And I think there'll be maybe more than 6, but maybe not less than 10. Maybe less than 10. But that's going to be really towards the back end.
So it'll be condensed into like Q3.
Yeah.
The Broncos are, finals bound.
Off the back of a Broncos Lions double. Hey, the last time Brisbane flooded, I think the Raw won something, so maybe they're in for a shot this year too.
Wow, who? Jeez. Yeah. People are at a loss as to who that sporting team is.
The Reds might be a thing still. I don't know. I think they're winning some games. So, yeah, I think you'll start to see that sort of 1% growth per month again towards the back end of this year, when I think people in Brisbane will have saved their pennies, money will be a little bit cheaper than what it is today, and prices won't have grown so significantly in the first half of this year that it scared anyone off. It'll just kick on a little bit again.
Really ramp up a gear.
I had this same conversation with an agent this morning. We were sort of debating why Brisbane doesn't see the same peaks and troughs like a Sydney or Melbourne does. And we've always been a relatively affordable town for people who lived here, but also people who would visit and go, well, this is pretty nice. I should buy an investment property here. We're getting to the point now where we're still driven by affordability rather than external markets. It's like, if I can afford to buy a house, I will, and there's enough people who still can. So Brisbane has sort of gone up and then flattened a little bit, then gone up and flattened. We really haven't had a traditional correction like some of those other southern markets have. I think that's still the midterm view for our market, up and then flat. I think we're in a pretty stable part now where there's marginal growth, but you wouldn't on a map, on a chart, you wouldn't really see it as an uptick. I think we'll see an uptick again for the last 4 months of this year into very early 2026.
Nice one. How much more are flood-free properties worth now, from Ben?
I don't know.
For sure. And this harbours back to when you do your research, like when you're doing your comparable sales research, making sure that you're not just looking at addresses and punching these in and working out value based off just a blanket of addresses. Do the flood searches.
For sure.
You need to understand, like, if you are looking in a suburb which has a mixture of flood-affected and flood-free properties, if you're comparing to one or the other, make sure you're marking them accordingly. That's going to build out, almost like two different value sets for properties in that suburb of the same style and size that you're looking at, flood affected, and you'll see the gap and you'll be able to work it out accordingly.
I'll ask that question back to you then, because we just did this analysis of basically Bulimba properties, ones that had flood risk where they flooded or otherwise, and ones that didn't. What was
it's hundreds of thousands of dollars difference.
10%?
Yeah, perhaps. And that's the thing, like, when you're looking at the bigger price points, those gaps appear enormous. But maybe if you're looking at a lower price point area, further out from the the city centre, maybe it doesn't seem as extreme, but it is like 10% is a considerable amount on a purchase price. So I'd say do your research. Comparable sales are always king.
100%.
What do you need to have prepared for working with a buyer's agent? From Abby.
I promised Abby a shout out on this, because I replied to this DM and I was like, I'm going to answer this question to you first, because people will think that we've handballed this to ourselves.
It's like, sorry, is that meant to say from Chase?
Yeah. So thank you, Abby, for the handball. What do you need? Not much. Like, we start off with a chat and we kind of ask all those questions. How long have you been looking? What are you looking for? Have you made any offers? Why haven't you bought? What do you think's stopping you? Are you organised? Are you pre-approved? Typically, we don't launch a client or engage a client, as in paperwork signed, engagement fees paid, all that sort of stuff, until we spoke to their broker. Ideally, we've met a solicitor or given them one if they don't have anyone in place. We have that sort of ironclad pre-approval. We've tested the budget on a few historical sales. We've spoken to a few agents to make sure that we think we can add value. That being said, we have also had clients where the first time they have ever done a budget was with us, the first time they ever met us.
So what do you need to have prepared? You need to have a mobile phone, you need to have WhatsApp, and perhaps an open mind.
Yep, that's about it. And I think, we are big fans of slowing down and speed up. We like having all the ducks in a row so that our job becomes maybe not that easy, but it is very simple. We have a plan. It's our job to execute.
What does a seller/agent legally need to disclose? From Claire.
Shout out Claire, old friend and now friend of the show.
Nice one.
Right now, on the 12th of March 2025, they need to disclose the legal number of bedrooms. Shout out to all those agents who are throwing multi-purpose rooms in as fourth or fifth bedrooms.
The 6 car spaces.
Yeah.
Man, that's just a driveway.
The reality of that is that they don't need to disclose all that much. And it's actually very much buyer beware, buyer do your own research. That is changing in August this year. So the laws that govern real estate agents and real estate in Queensland changed back in 2023, and there's been sort of a grace period of like, this is coming, be prepared. And I promise you, in the next few months, all these agents will be like, what does this really mean?
Where was this memo?
Yeah. We used to be the Property Law Act of 1974. It's now the Property Law Act of 2023. And what happens on the 1st of August is that sellers are going to have to, it's called a seller disclosure regime. And they legally have to provide almost disclosure statements like you would expect if you were buying a body corporate for every property. And it's things like title searches, which the best agents have attached to the contracts anyway. A lot of this stuff, all the good guys are already doing, so it's not going to be a really scary thing for too many people. But it's title searches, it's a survey plan, it's are there any encumbrances on the property? They have to disclose the zoning that property is in. I'm just reading an RAIQ fact sheet as I go through this. I do not have this all memorized. They have to disclose all the building certificates. So that needs to be provided ideally before a buyer is signing a contract, which is just going to be a big sorrow relief for a lot of people, because sometimes you buy a property, they've got the deck extended and the solicitor's like, we need to go and make sure that was all legal. It's going to cost you some money for the searches. And the buyer, still in their cooling off period, is like, what do you mean? What do you mean it might not be legal?
Yeah. How long have I got here? Oh, my God. Yeah.
So licensed building work, unlicensed building work needs to be disclosed as well. Any neighbourhood disputes, which actually that needs to be disclosed now anyway. If you've ever seen a standard REIQ Queensland Law Society contract, they tick that box as no, but it's just going to be something that's going to be spoken about along the way as well. Council rate information and all that sort of stuff is going to have to be done ahead of time. Water, utilities, all the sort of things that as a buyer you wonder, right? You wish that on realestate.com it said rates are this, water's this. That will all form part of that text message that you get when you sign into an open home. I think it's really good for the market. I think it will help buyers build confidence to make fast decisions on properties. It does put the onus on the real estate agent to be more transparent, more professional, and that for me is a very good thing.
So good. Okay. And getting sellers to be super organised, it makes it all very real. Putting together almost like a disclosure about your property to be like, hey, we need to display everything we possibly can about this place so that we're dead serious about finding the right buyer for it.
100p.
Another one from Claire: how to spot flood damage.
That's you, my friend.
How long's a piece of string? Obviously, it's a lot easier in weeks like this, particularly getting into properties because they're still wet. That's the reality of it. What you'll find with different forms of flood damage, it's coming up. Like if we're talking about groundwater damage, you're going to see a watermark for the most part, unless they've gone and repainted over. Like groundwater sitting at a certain level, even for a short period of time, stains the, like whether it be external or interior paint. So you'll be able to see almost like a line of where the water came up to. Super gross. It actually speaks to like how disgusting floodwater actually is, because you just don't even know what's in it. Particularly given the media release that there's like sewage like in this floodwater. So stay out of there and wear your gumboots. If it's like damage to a roof, potentially, you're looking for warping, you're looking for bubbling, because if water has found its way, it can often not be directly underneath where the hole is, or like the loose screw or whatever it may be. It can track its way around, so you're looking for warping, you're looking for bubbling of plasterboards, wet spots on the carpet. It's a lot of water-related stuff, damage. It's common sense. If something doesn't look straight and normal and dry, there's a question to be asked.
For sure.
The follow-up from that is to get a building inspection done, in which they'll use moisture meters, thermal imaging cameras, and that's going to give you, the X-ray vision that you need to see beyond your commonsensical look at what warping, discoloration looks like. That's how you spot flood damage or water damage in general.
Yeah, nice.
Yeah. Okay. Why won't sellers accept subject to sale? From Anna.
Thank you, Anna. Sometimes they do, is probably the way to start that question. I think you've got to find a seller who maybe doesn't know where they're going as well. It would be very rare for somebody who is on the market, paid their marketing, going to auction, got a best and finals offer date, whatever it might be, to entertain an offer that is uncertain. For a reasonable period of time.
And that's why they want certainty. They don't want to find that they're accepting an offer and then 2 months down the track, they're still unsold and starting again.
And I think realistically, it's going to get a little bit worse now, because there might be a lot of people like, I want to move from my floody house or my wet house or my damp house or whatever it might be. It's just when you're selling a house, and this is probably a shout out to all the sellers there, and we do have a podcast upcoming about how to sell, in our opinion at least, the right way. So listen out for that one. If you are selling a property, it sucks. Like, buying a house sucks. Selling is way worse, right? You feel like you have everything to lose, and in those days when your property hits the market and you're waiting for your first open home, you will feel like no one is going to come through and no one's going to want to buy it, and you'll be stuck. That's just how it goes. It's not a good feeling, and the best agents will sort of manage you through that and help you understand that it's a pretty good market and you'll probably be okay. If you then get an offer and it's like, hey, I like your house, I don't like my house, I want to buy yours, but I have to wait for someone to sell mine, and I haven't gone through the process, and you don't know, have they painted, how are they organised, are they spending money on marketing, have they picked a good agent that's going to do it the right way, or have they picked someone who's cheap and is going to do it badly, right? It just doesn't make sense to run that gauntlet when there's potentially so many other people in that buyer pool who can offer you the same money, maybe more, maybe less, but you may only have to wait 7 days, or at worst 14 days to have that certainty, versus potentially, 3 months. Who knows? That being said, if you are getting offers on your property, or you are making offers on properties, and there's a subject to sale clause in there, you can put a sunset clause as part of that subject to sale. And all the sunset clause is it is a protection for the sellers, that they can take your offer with your subject to sale, or you can accept an offer with a subject to sale, but the seller then reserves the right to take a better offer if it comes along. It's usually, and we've sort of used them a couple of times when it's just made sense for our clients and we've got them over the line. We're making this offer, the sunset clause can only come into effect after 14 days or 21 days, so they can't turn around on day 2, take another offer, and you've wasted all this time and energy. You effectively get 2 weeks to get your house prepped, get on the market, pick the right agent, pay the marketing, do the video, get it red hot, ready to go. But if they then receive a better offer, or an offer that is more exciting, enticing, entertaining to them, they can serve you with insert number of days here. We like to do it with 7 days, so they can exercise a sunset clause, and then we have 7 days to go unconditional.
In which the sun will set.
It is what it is, and you get a choice at that point as the buyer. You're like, I'll run the gauntlet. Maybe I have sold my house, maybe I haven't, I don't know. Or you can de-risk yourself and pull out and shake hands and say, thank you, hey, we tried, it didn't really work.
For sure.
Yeah, it's not in a seller's best interest, in my opinion, thinking with my sales agent hat on, to accept an offer that is subject to sale, certainly without a sunset clause. But that is often a way of navigating that circumstance if you really do need it and you found, the one of one, and you're just going to make it work. It's
giving both parties that little bit of extra certainty and flexibility to go out and still hopefully land the plane. If you haven't, obviously taken the steps like we would always suggest, selling first, getting a contract unconditional on your property with a longer settlement date. That's obviously the ideal way to go about it, because that way you're only then putting potentially subject to settlement clauses on contracts, which you can quote the contract date on the said property, and you are just hoping to avoid the buyer getting hit by a bus something horrible like that.
And I think that's a really good point. Like, if you are somebody who has sold your property and you are then now waiting to find the next one, and you do find the next one, but your next purchase is dependent on you actually getting the funds from that sale, a subject to settlement clause is very different to a subject to sale clause, where you can be like, this is subject to this property settling, it has an unconditional contract, the contract was on this date, it is due to settle on this date, and that date is on or before the settlement date I'm offering for this property. Yeah, it's a protection against someone getting hit by a bus, as you said.
0.001% risk.
For sure.
Is buying a block of units to rent out and then sell individually one day a good investment? Talia.
This is an interesting question. I when I read it, I wasn't sure how we were going to answer it. I'm still not, but I'm going to go with what my gut was, which is we love blocks of units as investments. If you can pick up a 70s or 80s brick 6-pack and the roof isn't about to collapse, probably going to cost you about $3 million somewhere in the 10K radius of Brisbane. The rental returns are excellent. They are genuinely like bomb shelters, the way that they're built. So very low maintenance. They are traditionally very easy to cosmetically renovate.
Definitely, I was going to say, you've got different ways you can pivot with it as well.
They've all got concrete flooring. They're bunkers, and they're really well built, and they've stood the test of time. The roof is usually the problem with those, so just go and check a roof. So buying one, if you've got access to that capital and you've got a risk profile to take on something like that, I think great investment. We love that if you've got that sort of money. Selling them individually depends on your strategy, I think, is where, like, do you sell it all? Do you sell them individually? If you need the money, maybe you sell them one by one. If you're buying all 6, you then probably have to then go and get them individually strata title if they're not already. There's a cost that comes with that between lawyers and setting up body corporate schemes and all that sort of stuff. But somebody way smarter than us can do all that for you. It's just going to be a fee. And then, you can then reserve the right to do whatever you want. Sell a few, take the cash, enjoy it, keep a couple, take the rentals, whatever it might be. It's just going to be completely dependent on your strategy, and I will sound like our lawyers now, and I'll be like, and you should take your own independent advice whenever you're deciding what you want to do there.
Shout out to the people smarter than us.
Yeah.
Is it okay to round up when an address is on the border of a more prestigious suburb, from Jimmy?
All right, we have different ideas on what this question means, so you go first, and I'll bring up the tail.
I think I know what Jimmy means by this, and I mean, you do see it every once in a while where there'll be a particular street potentially which borders on 2 suburbs, and one suburb is Splash and one suburb's the next one up.
Camp Hill and Carina.
For sure. And maybe the top end of the street is in one part of the postcode and the other one's in the other, and they've taken a little bit of liberty with the advertising where they've put it as, Camp Hill as opposed to Carina. Vice versa, you see plenty of addresses where you see the street, it might be a corner block where they've, instead of being, 1409 Logan Road, they've gone with, number 3, like Clarence Street, because they don't want to have the perception of this being a alarm bells, main road property in the lesser suburb. They've taken liberty on maybe the suburb and the street. So I don't know if it's okay to do it. It certainly happens.
Yeah.
People would have trouble then searching for it, I guess, to some extent, punching into their Google Maps. But, it is what it is. You'll work it out in the wash.
Man, my view on this is, I think if you are, and let's use Carina Camp Hill as an example, are you going to pay a Camp Hill price if you buy on the Carina border? Probably, realistically, because a lot of the comparable sales, particularly if it's a house that's had a bit of work done to it, or if it's a new property, the comparable might be 500 meters up the road, and it's in Camp Hill, not in Carina. I'm trying to think of what the north side example would be. Maybe Enoggera, not Ashgrove. Enoggera's pretty nice though. Yeah, Carina's nice. Cannon Hill, Morningside, that's south side again. I'll figure this out by the end of this, and I'll keep my train of thought. So I think is it okay? Should you be confident in paying the other suburb price just because this one is very close to the border? My gut feel is the house is the win. If it's comfortable for you and it's comfortable for your family, and that house and that position, even though it's 500 meters away from the suburb you really want, works for you guys, buy it. But
when you're negotiating, make sure you always reference, hey, this is not Camp Hill.
Yeah.
This is
the ghetto.
It's like, yes, I know it's on the border, but I'm not paying a Camp Hill
for sure.
price.
We really like that pocket of Carina north of Stanley Road. It's not the ghetto. It's definitely the next one up, and you should go buy a house
Love
there.
Love that. Go Carina. Shout out to Aromas. Love that coffee. Got another one this morning. How do I approach a multiple offer? I hate the guessing game, from Natasha. Don't we all?
Don't we all?
The guessing is the worst part. The hoping or not knowing it's one of the grossest feelings, particularly if you've found a property that you feel is the one for you, and then you're met with a very untransparent process in which you are essentially throwing shit at the wall.
Yeah, and you've been told that it's best and finals by this date, and let's say that that's a Monday at 5 o'clock, and then you get a call at 5:30 on a Monday, and you're like, do you want to give me some more money? I'm talking to everyone about giving me more money. The
double best and finals.
Literally the shittest way to buy a house. And it really, even if you buy it, you're stoked, but then you wonder, were you the best offer by $1,000? Were you the best offer by $100,000? Who knows? Like there was a property that went to best and finals a couple of weeks ago. It ended up, there was 16 offers. We weren't involved in it, but we just know the process. 6 of them were so far above the other 10. And the 2 that were, fighting it out at the end, there was $25,000 difference between those 2, and they were light years ahead of the others as well. It's just,
I bet they would rather not know.
They probably would rather not know. To your question, Natasha, you put your best foot forward. This is what we say with our clients. If you find yourself in that scenario, it's a bit like going to auction. You want to have the conversation before you make your offer of like, if someone pays more than this price, are we okay with that? again, going back to our Camp Hill Carina, the house is the win. If it is the one for you guys and you feel about this property like you've never felt about anything else that you've seen, have the argument before you make the offer. And it's like, if your price is 1.6, and have the argument, would we pay 1.7 if you have capacity to, right? It's often an easier scenario in a multiple offer. If you have no risk of overpaying because it's the top of your budget, you just put what you're comfortable paying down, and it is what it is. But if you've got some room to move, have a conversation about, would somebody, if this is where we see value, would we buy it for 100 grand more? And we use 100 grand because most of the time the answer is no with our clients. And it's like, cool, well, let's work backwards from there. And where you both all agree, it's a no, but one of you will start umming and ahhing. And that's that inflection point. That's where you've got to have a conversation. That's where the argument should be, because you're probably very close to buying it or being stoked to miss out, rather than being bitterly disappointed that you missed it for 3 grand when you would have paid 10 more.
For sure. And think of it like that. Frame it like that. If you were to find out at 535 that it sold for, 1.636, and you're like, oh, we probably would have paid that. Well, you should have had that argument ahead of time.
For sure.
And you need to frame it in both ways. What are we willing to pay, but also what are we willing to miss it? Where are we going to be okay with seeing the price pop up, whether it be in half an hour's time or in 2 weeks' time? Are we going to be okay with seeing that number there?
That way you are happy either way.
For sure. Try and put yourself in a position to be in control of the situation. Walking away happy or walking away with a completed contract.
Rock and roll.
Mate, that was a resounding success. Looking forward to the next Q&A. He's Sam. I'm Chase. Cue the song.